Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is the Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. I'm going to start by taking a look at the daily chart, and I want to bring your attention to this area up through here between around 1.0999 and 1.1017. That level corresponded with a number of different swing highs through here. We broke above that level, extending up to this this high up through here before rotating to the downside a few days later and breaking below that level. What is key is these areas right here where we found two highs ahead of these levels, but they formed this swing area. And it wasn't until yesterday the price moved back into that swing area right through here. And what do? We found willing sellers against that level. Why? Because risk can be defined and limited against this high here near 110.17. If the price moved above that level, then it would increase the bullish bias, or give the buyers more control, I should say. And we would likely see the price move higher, but because sellers leaned against this level, they forced the price out to the downside. So that's lesson number one, and what I gleaned from the daily chart. Now let's go to the 4-hour chart and take a look at what that move to the downside has now done. And we've seen the price move lower, and in trading yesterday, the price came back down to this swing area right through here. This is not easily seen off the daily chart, hence why we have to go to the 4-hour chart. And this level was defined by this high right here and this high right here, or these highs right here, I should say, where the price came in this little area between 1.0942 and 1.094778. And as you can see, the low price right here stalled right in that area. When we on the way to the upside, we did stall in that area as well right here before breaking to the upside. So there is that history that defined this area as a key level. And as you can see in trading here today, the price did break below that level and continue its force to the downside. So key level now, this area is going to be resistance on the top side. In the process of the move to the downside, we've now broken below the 38.2% retracement of the move up from last week's low to the high price that we saw in trading yesterday. And we also moved below this swing area through here, just another swing area defined by, you guessed it, other swing highs and swing lows going back in time. And you can see the number of different times, swing high right here, swing highs through here. Move above that level, test this level, and move higher. Move below that level. We actually tested it right here before moving below, and then coming up to the level and testing it before moving to the downside right here. So this the price in trading here today came down to into this yellow area. Also near that is a 38.2 of the move to the upside. But in the last few minutes, we've seen a rotation, or the last hour or so, we've seen a rotation to the downside, and we're out below this level right here. So this is a closer risk level for traders today, as long as we could stay below that 38.2, below the 109.22 level. The sellers are feeling more control, at least in the short term here. The next target would be the 50% retracement, which happens to be the low price for the week as well. That level comes in at 1.08922. So stay below 109.22, move down to 108.92, and see what happens at that level. If we do go lower, then we'll start to look down toward this level right here, which is where the 100-bar moving average on the 4-hour chart is located. All right, let's take a look at the dollar versus yen next. And this currency pair, well, if I go to let's go to the daily chart first. Now, if we take a look at the daily chart, the big, huge moves to the downside. This high right here was July 3rd. So we nearly retraced the entire move for the year. I think the low price for the year was, or the closing level from last year came in at, 140.99, and our low price from yesterday's trade came in 141.68. So we got within 68 pips of the closing level from last year. That's after moving up from 140 all the way up to 161, and we've done it since the high was reached on July 3rd or 4th. So quick move to the downside, got within 68 pips of that, and we started to rotate back to the upside. You see the 50% retracement, that's of this move from this low going back to January of 2023 to the high price right here. That comes in at 144.58. And you can see that we're just above that level at 144.638. So watch what happens at the 58 level in trading here today. Maybe there'll be some either buying or selling near that level. But switching now to the 4-hour chart. What I like about this move this corrective move to the upside. And I talked about this in videos yesterday. This was going to be a target area up through here. That target area was defined again by swing levels through here. You see swing lows, then we move below, and we started to use that level as swing highs. Swing high, swing high, swing high. Break above it. We start to try to use it as a support here and here and here. Move above it here, and the last thing that we do is come right back down to that yellow area, find support buyers before moving all the way up to our high price here. So you see the history here. And what do? We fell below that. We first tried to hold support against that level in trading last week, and then fell in trading yesterday all the way down to the 141, 62-ish type level. Got within 68 pips of the closing level from last year, and then rebounded. Where we rebound to? We rebounded right to the 145, 80, 89 to 51 area, which I had earmarked as a level that is going to be important going forward. And lo and behold, sellers lined up against that area and rotated to the downside. So guess what? We need to get above this area to increase the bullish bias going forward for the dollar versus yen. If we can't get above that level, the bias still remains to the downside for this pair. You can go to things like the 5-minute chart to try to find other clues as to where there might be resistance or support. If you're more bearish on this, you can use a 100 and 200 bar moving average as a barometer in trading here today to try to see if the price can stay below that level. If it does, it's more bearish for the dollar versus yen. Or you can maybe go to the 1 hour chart and see if there's any clues from it. And lo and behold, the 100 bar moving average is starting to catch up with the price on the corrective move, but it's still above this swing area through here. So if that were to start to move back down, you can use that 100-hour moving average as a resistance target on the top side to see if it stays below that level. Finally, let's take a look at the sterling versus US dollar, and we'll look at the 4-hour chart in this currency pair. Yesterday, we didn't have the movements that we saw in the versus the US dollar for this current currency pair that we saw in the euro, that we saw in the dollar versus yen. Nevertheless, there are two levels that proved to be pretty good technical levels. One is this swing area low right here, which found support near the 127.10-ish type area. The level was defined by a number of different swing lows, actually going all the way back to here. You can kind of blur your eyes and see those levels through there. On the top side, we held resistance against the 200 bar moving average in the 4-hour chart. And you can see in trading here today, the price has been down, down, down. And in the process, we've moved down to test the 50% retracement of the move up from the April low to the high price that we saw in July. We also moved below the 100-day moving average, 126.83. So 126.71.83 is going to be a key barometer for traders. We're currently trading at 126.78. So we are in between these two levels. If we break below the 50% retracement, we'll then look toward the 200-day moving average at 126.46, and consider this area the cluster of support with a 100-day moving average, 50% retracement, 200-day moving average as key levels. They come between 126.48, 126.83. I know it's pretty wide, but those levels are important from a technical perspective, and we're right in the middle of it with the price trading below, between the 100-day moving average of 50% retracement. So I think that's going to tell the story for this pair today and going forward. Move above 126.83 with more momentum, and we could see rotation back to the upside, watching 127.10 as a level of importance on the top side. Get above that level, and we'll see further upside momentum. Conversely, break below the 200-day moving average, and it opens the price to the downside. So a little bit more detail in trading in the report this morning. I hope you found it helpful, educational, learned something from it. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.